All right, good morning, all. Welcome to Day Trading Live on this wonderful Friday morning. My name is Clinton, and this is my channel, Blackwing Trading. I am a futures trader. I trade the S&P 500 futures, and that's what you will see on my channel. You'll see pre-market analysis and live trading. And my goal of this channel is to let you know that this is something that is attainable. If you are new to futures trading or you're interested in futures trading, hopefully you can learn something from me. Even if you've been trading for a while, hopefully you can learn something from me. But we are here to make some money in the markets on this morning. So I want to start off on the charts like I normally do on a large scale. If you're on, just let me know you're on by joining and hitting me up in the chats just to say, hey, I'm on. I really appreciate your interaction and your presence on the chart in the chat. But we'll get right here to the charts. And so I'm on the 1 hour chart, charting on Thinkorswim, and we can see over the past couple of days, we've kind of been trading sideways, but we did gain some momentum up overnight. And so we have for a resistance level at 6502.5. And the market got up there 2 days ago on Wednesday, and then it rejected and pushed back down. Traded up to like the 6490s area, traded sideways like that overnight. We had economic data yesterday, which is the producer price index, and we had the initial jobless claims. And so both of those numbers were kind of high. The producer price index, the inflation that producers are experiencing, went up. And then the initial jobless claim was like 224,000. And so we can see that the market took a big dip when that data came out on yesterday, but it did recover by the end of the day, got back up to the 6490s area. And then it actually traded up to 6508.75 as a high overnight. And it's pulled back a little bit from that area. So now it's kind of trading sideways, 6,500 plus or minus 2 points, 2 or 3 points. And that's what it's been doing this morning. So, kind of unsure about what the market's going to do today, but that's fine. I wait for the market to make I look at price action. So I'm let the market do what it's going to do. And then, I take a trade accordingly. Since we are in all-time high ranges, 6508, I've said this before on the channel, I'm always a little hesitant to trade aggressively to the upside when we're all-time highs, because you don't know how high it could go. I mean, it could go 5 points, it can go 30 points. And it can hit something and then reject. And that's usually the thing that I am hesitant about. It's usually a better trade to wait till it hits that high point and then catch the rejection. I actually had a great trade like that 2 days ago. When it hit 6502 here, I took a down trade at 6500 and wrote it down here. And I think I made like $800 on that trade. So usually when it hits that resistance point and then it pulls back hard. And that's a good time to go short. But if it's steadily going up and up, I'll just let it run, because it's more so discovering what level it's going to go to. And that's good information for like the next time you trade, right? Once you identify a level, then you put it on a chart. So that's what I did. You can see here, 6502.5. That was a high from 2 days ago. So we identified that level and I put it on the chart. So now it's at 6508.75, but I don't know what it's going to do when the market opens. It may go higher than that. Whatever that high is, I put that on the chart. So now we have a dedicated level for price action of where the index can trade to. So, but now we can see, like I said, it's just under 6,500 and it's, trading plus or minus up and down right there, not really making any big direction. Another point of data that came out today was U.S. retail sales. So, retail sales is a measure of, good morning, all. I see Naibi. Thank you for jumping on, Joy. Good morning. I see y'all. Thank y'all for jumping on. U.S. retail sales is a measure of how much we're spending. And so all the retailers out there, Walmart, Target, all the retailers, they report like what their sales are. And it's based off, the previous months and last year. So we can see if Americans are still spending money or are we holding our money back. And that's a crucial data point, because we are a consumer society. And so when those retailers, if they say, hey, you know what, our sales are going down because people aren't spending as much money. That's an indicator that the economy is slowing down because people are holding their money back. But if the sales are increasing, that's an indicator that the economy is doing well because people have more disposable cash. They're going out and buying things because they have money. And so it's one of those data points that economists in the market always looks at, analysts always look at. And so for today, retail sales rose 0.5%. The estimates is that it was going to raise 0.7%, but it rose 0.5%. So it was a little bit below the estimates, but that was fine. But one thing that they did like in this report I saw is that the auto sales rose 0.2%. And so that's something that the market liked. But in any case, they're looking at, okay, what's the state of the economy? And all these data points add up to how well the economy is doing. So that's the data that came out on today. So this week actually was a very important week for data. Had the consumer price index on Tuesday, producer price index on Thursday, had the unemployment initial jobless claims on yesterday, and then U.S. retail sales today as well. So all those data points that the Fed is adding up to see like what the economy is doing. And so, but in any case, so we traded up again. Like I just want to point out, we were around the 64.90s. We traded up beyond the high from a couple of days ago, which is 65.02, got up to 65.08.75, pull back, and then now we're plus or minus 2-3 points around 6,500, which is a psychological level. So if this is your first time here, I trade pretty much one strategy, which is the opening range break, 15 minutes. I use a 15-minute time frame on that. And what we do in that 15 minutes is we allow that price action for 15 minutes. I draw out that area visually so you can see it. And then I'm looking to take a trade definitively either up or down. So if it definitively makes a move up beyond that range, I'll take the trade long to the long side. If it begins to pull back, we take it to the short side. So what are those levels that I'm looking at today? Well, since we're already here, and if it makes a definitive move to the upside, those next 5-point increments are what I look for since we're in price discovery. So, if we break beyond 65.08, for instance, my next point of looking to take profits may be like 65.10. 65.15, matter of fact, 65.15, not 65.10, but 65.15, somewhere around that area. Because, like I say, I'm cautious since we're in that price discovery to the upside. To the downside, though, you actually have a lot of room to the downside. So there's actually kind of more so when I'm leaning to, because you can have some big moves to the downside. As you can see here, 64.90s is somewhere where it anchored at. If it pulls back there, which is kind of pulling back there now, the 64.94. You can pull up back all the way as far as 64.60 and the 64.57, 64.60 range, which is this resistance area that you can see that it's touched multiple times. It pulled back here overnight a couple of days ago, and then pulled back here again yesterday to this 64.60 area. And so I'm definitely going to be looking at that. Another area that I haven't drawn a line here, but you got the 64.70s. This is somewhere where it anchored at. You can see. Actually, I'm going to draw a line right here now. They'll call it 64.80. I'm going to draw a line here. This is an area where it could anchor at, because you can see touch here a couple times, bounce off this, bounce back up, touch here a couple times, settled out right there. So 64.80 is a area that it could pull back to as well. Intermediate before it gets to the 64.60. So it could pull back here. Could go back to 64.60, and it even could pull back, the 64.40s. And so those are the low areas of price where it could put price action has happened before, where it could pull back to. So, that's what I'm looking at. 64.80, that level, 64.60 here, and even as low as 64.40. To the upside, nobody knows because we haven't touched there. So just be cautious and take a small trade. But those are the levels that I am looking at on today. All right, one more thing that I've begun to do is to look at the top 10 of the S&P 500 so y'all can see those companies. So since I trade the index, the top 10 companies in the S&P 500 make up about 30% or more of the index. And so if those companies are doing well, it pulls the index up. And if those companies are doing well, it pulls the index down. And so I like to look at those top, some companies in that top 10. And so we'll go there now. First one I want to look at is Apple. So Apple has been enjoying a pretty big price increase ever since they announced that they were going to invest in the United States. They were trading, in the low 200s, had been there, for a couple of days. Before that, they were trading like about 210, 215, and they had took a little dip. But then once they said that they was going to make that investment in the U.S., people start betting on Apple. And now they're trading, you can see, in the 230s. And so they've been enjoying a good run over the past week or so since they've made that announcement they're going to be investing in the U.S. All right, Broadcom. Broadcom is a big chip maker, chips and cell phones, cars, big semiconductor company. They're in the top 10 at S&P 500. They've been doing pretty well, trading like in the 310s, 315s. They got a high of 318 a couple of days ago. You can see probably about a couple of weeks ago, they were in the 270s. They traded high, they pulled back a little bit, and then now they're still, kind of trading sideways and up to the 300s. Tesla, everybody's favorite company. You love them or you hate them. But Tesla actually has been on a nice run. So you can see a little over a week ago, about 2 weeks ago, they were down to 300, below 300. 300 is kind of a point for Tesla where if they're above 300, they're doing well. If they start creeping below 300, then something might be going on wrong, with the company or things like that. So they got above 300 again, like say they were above that before, in the 330s, and then they had got below 300. So now they're trading up. They got as high as almost 350 a couple of days ago. Now they're at 337. So they've been trading up. And usually the trend is when Elon Musk is focused on the business, Tesla trades up. When he's not focused on the business, Tesla usually takes a hit. Nvidia, interesting, has been trading sideways for a while in the 180s. They haven't moved from there, well over a week. They had an interesting announcement with AMD on last week that they're going to give 15% of their sales to China. That's the market open. So no worries. We're still waiting for 15 minutes of price change, but they're going to give 15% of their sales to the U.S. Of China sales, only China sales, China chips. And so for them, that's like their H20 chip. And then AMD is going to sell I think it's like the MI308 or something like that. But they're going to sell that to China. They're going to get 15% of those proceeds to the U.S. And then those chips are going to sell to China. And so they did that, for my reading, they did that to kind of avoid some of the president has been threatening semiconductor tariffs. He's targeting the semiconductor company. So he's been threatening tariffs on the semiconductors. So they did that to kind of avoid paying, high tariffs for semiconductors. So interestingly enough, though, China's been pushing back because now they're saying that there may be some security violations. They think that we may do some remote spying on them through their chips, through our chips that we sell to them. So they were discouraging some of their companies from even using them. So it's going to be interesting to see how that works out. But either case, they've been trading sideways, said like 180s ever since they announced that. And that's where they're at right now. The Googles, two sides to Google, their A shares and their C shares. Alphabet, I guess I should say, not Google, but Alphabet is probably a parent company. They're at 200, and that's a good place for them. That's a good place for them, trading up near 200s. Many people are wondering how Google is going to fare with ChatGPT, and so that's been a lot of talk about that, how they're going to fare with that. They're making big investments in AI. But some people think that ChatGPT may take over Google because, if you look at the stats, more and more people are using ChatGPT to find information and things like that. And so, Google in the future, they're going to have to decide what they're going to do to answer that. All right. Microsoft trading in the 520s. They pulled back they had a great earnings here. You can see. They got a huge push up in their earnings. They were trading in the 513, 510s, and they traded all the way up to 560s. And then after they had their earnings, people took profits. They pulled back, kind of went up, and then they ended up settling in the 520s, which is only about $10 beyond what they were before the earnings. So it's going to be interesting to see what they do in the future. They had a big push up because their Copilot and the AI functions, and they're saying that it's like 1 billion users of Copilot, which is their embedded AI and how they do things from the Excel spreadsheets and from like Word documents and all that other stuff. And so they've been trading sideways in the 520s for a while after that big blowout. Amazon, the same, been trying to gain their ground back up to the 240s. They had good earnings as well, but they took a hit during their earnings. Earnings is always a crapshoot. You may go up and may go down. People may like the guidance or they may not like the guidance, but so they took a big hit for earnings, even though they did well in their earnings. They traded sideways, and now it's beginning to trade back up. It's probably going to surpass that 240 area after a while. Meta, which is one of the people who had great earnings. Meta, they were trading at like 690. They went all the way up to like the 770s. And then they took a little dip. People took some profits off that big move, but they traded right back up. So you can see they've been trading sideways and basically in the 780s for all week. And so Meta is maintaining that big move that they got from earnings. And so they've been doing well. And then JP Morgan, largest bank in the world, US bank, they were trading high. Now, the financial earnings usually are at the beginning of the earnings season, and they did really well doing earnings. Trade up as high as $300. They pulled back, and now they're trading like in the 290s, trying to break that 300 again. But that's where they're trading at. So that's it for my top 10 in the S&P 500. So everybody seems to be doing okay or either sideways, but it looks like it's pulling back a little bit now. So we'll go back to the index. We got about 5 minutes of price action that's already happened. We're going to go closer into the 5-minute chart. We can see that we've been pulling back. We have a line at that 64.80. We're going to see what it's going to do there. It may bounce there or it may come back up, but it seems like there's more room to the downside versus the upside. All right. Most of you, if you already know, I am a funded trader with Topstep. And so I took like 2 trades this morning. So I'm down like $50, $58, no big deal. But this is where my execution platform is, where I take trades. So you'll see me like when I actually enter the trade, I'll go back to this screen. I do my charting on Thinkorswim, but I take my trades here on Topstep. So all right. Still waiting for that price action. We just got to actually this is on the 15-minute. Let me take this down to the 5-minute. All right. All right. So we see we came down and look like it may be pulling back up. So we'll see. It's like that price action keep going up. All right, this 15-minute open range break is very flexible. If you're interested in trading, listen, I do this strategy for that purpose. It's very simple. It's not hard to really learn. It's just about executing it well. So what you do, and you can extend this, you can do a 30-minute opening range, you can do a 15-minute opening range, you can do what you want to do. But the whole premise behind it is, okay, you allow the initial price action to settle out in the morning, because there's always, a lot of fluctuation and volatility in the price action in the beginning. But eventually the market picks a direction. So, it may be going sideways and doing this up, down, up, down, up, down, up, down. Then after that, it settles out and then it begins to trade in a certain direction. And sometimes throughout the day, it trades in a certain direction, then it reverses that direction, and it may go back up in that direction again. But the key is, with the 15-minute open range break, you find out what that initial direction is, and then you take that direction, for whichever way the market is going to take a trade from there. And so it allows the initial fake outs and all that stuff to go through. And then you see, okay, all right, this is definitely going down, or hey, this is definitely going up. And then you can take the trade in that direction. So I find a lot of success with it. It's the only strategy pretty much that I trade. And you don't need 15 different strategies to trade well and make money in the market. You just need one, and you just need to do it well. So that's what I do, 15-minute open range break. The market has been pretty resilient. Yesterday, we had that negative data, and it traded down hard, but then it ended up going back up to where it was. And you can see it's in made newer highs today. So the market is still resilient, even though it's getting some new data. This was a pretty big selling candle here, that first candle. Got a few seconds here before we hit this. Before we hit the third candle. And the way it's looking, it wants to go down. A couple of things I look at. You can see this line here is VWAP, volume weighted average price. And this line here, this green line, is the non-exponential moving average. And so VWAP, volume weighted average price, is a good indicator of whether the buyers or sellers are in control. What I mean by that is if it's above that line, that means that for the volume of buying and selling, the average of buying is higher than the average of selling. And if it's below the line like it is now, then the volume versus the average price of buying and selling is more selling than buying. And so that's what you can see. It's kind of pulling back, but it's trying to gain. Look like it's trying to gain now and pull up. So we're going to see what it does. All right, so it's time to go ahead and draw that caution area. So I like to have a visual representation, so I always draw it out visually. All right, so that's our caution area. Edit these properties so we can take it out to the end. If you got any questions about anything I'm doing, hit me up in the chat. Anything doesn't look right to you, or any other questions about anything else to think about, hit me up in the chat. I love your interaction there. All right, but there we go. So that's our caution area. Can you take a trade in here? I mean, you can. When you execute an initial open range break, though, I usually don't. Here's the instances where I do take a trade, though, just while we're kind of waiting for this. Say the market makes its way down and it bounces off one of these lower levels. All right, so I'm just going to do this so we can kind of see it. Say it makes its way down. Say if it goes down to 64.80 and then it clearly makes a bounce and it's making its way back up. Well, a lot of times it'll go down and it bounce off a level, and I know that it bounces off that level because you got two more green candles and it's making its way up. Well, I don't have a problem. This is me taking a long off that bounce, and it may push up into this area even higher. And I'll take a trade like that. But like when I'm initially doing the open range break, like now, I don't take a trade in here because this is think of this as the fluctuation area where It could go up and then you think it's going up and then it can pull back, and I've seen that multiple times, and you've seen it on this channel actually doing trading. You might think it's going to make a trend up, and it may push up, like in this instance, all the way up here to VWAP around 64.96, and then it may decide to pull back, and then it may go back up again. It may decide to pull back, and so this is like that area where you get, we call this chop. You get chopped up a lot, but then once it actually definitively says, "Oh, okay, I'm going up now," then that's when I like to take the trade, because it's going to trend up in that direction. In the same way, if it decides it's going to go down, then, it's like, okay, yeah, you're going down. Let's go ahead and take a trade in that direction. You can see this from here. Like, this was a big candle going down, and if you wasn't doing a 15-minute opening range break, you could think that, okay, man, that was a strong down candle. It's going to continue to go down. Well, you can see this candle was a green candle, and it pushed up as high as 64.90, and then it pulled back. And then now this candle is still haven't made its direction yet, the third candle. So you don't know which way it's going to go, and it's up, down, up, down, up, down. And there's a lot of computer trading. And so the computers realize that, they realize that because they're trading high frequency, they'll take a trade. The computers enter a trade, exit trade within 5 seconds, within 2 seconds, and they take advantage of those price changes. But human beings, we usually don't move that quick, right? The computers know that. So when they write these algorithms and programs, computers, they usually, like I said, they usually move so quick that it can make a trade, this trade right here, where it goes all the way down that 10 points, and then it'll come out the trade. And then here where, okay, it'll move up those couple of points, come out of the trade, and then go back down. And some people trade like that. Scalpers, some people do trade like that, cone of confusion. That's a good term to call it, Joey, is a cone of confusion. Some people trade like that. They're scalpers, quick scalpers. They jump in and out of a trade like 30 seconds, 20 seconds, a minute. I'm just not that type of trader. I never found real success in that. Maybe my brain moves too slow now. Maybe when I was in my 20s, I could have traded like that. But right now, I like to get a longer trend of the trade. And so that's why, I want to see everything settled out, and I want to see that direction determined. Because one thing is sure, I do know this in trading, the market always does make some direction. It may fluctuate shorter or longer, but eventually it does make a direction. It does make a specific direction. And then say it may change that direction over time, but it does make one. All right, so we're it's starting to come down now. So I'm just gonna take this a little bit bigger and see. All right, so now it's starting to break down. So I'm gonna look for a confirmation candle. Let's see, it's starting to make its way down now. Yeah, that's a hard down. Yeah, that's pushing down pretty hard. Almost makes me want to take it. The reason why I'm not taking it now, though, because I want to make sure it doesn't pull. If I take it where it's down at its low, like where it's here at 64.83, if I make this bigger here, it's pushing down hard, but the next candle it may pull back up, and that'll be the area. Like you can see, it's pulling up now. That'll be the area to take it when it's close up here, especially when you're going to the downside, it's reverse. So, if it pulls up, I want to get into it high up here and then allow it to have more room to go down. But if that next candle is down, we're going to go ahead and take it. All right, there it is, pulling up just a little bit. Pushing down. It's deciding to push down pretty hard.
Gold Peak Real Brewed Tea isn't made from real gold, nor is Gold Peak Real Brewed Tea made on a golden peak. But it is brewed.
They get a new candle in about 2 minutes. I'm gonna wait for my entry there. Oh wow.
Click or tap for more.
At Domino's, you can get 2 medium, 2
Getting close to that 6480 range.
family may not always agree on which
That line there.
At least if you're craving ham and tangy pineapple on hand tossed and dad wants onions and pepperoni on crunchy thin crust, you can get both. Order 2 medium, 2 topping pizzas for only $6.99 each from Domino's. Prices higher for some locations. Ask for this offer 2-item minimum. Prices, participation, delivery area, and charges may vary. Parmesan, stuffed crust, and pan pizza will cost extra. Local stores set delivery fees and may charge extra for some menu items, crust types, toppings, and sauces.
Texas summers can go on, but with Ultimate Season Pass from TXU Energy, you get 50% off energy charges during peak summer and winter, plus more months of automatic savings.
50% off? That's cooler than sweet tea in a heat wave.
And it lasts longer.
Yeah, this looks like it wants to go down.
Way longer. It's a top-rated plan with more than 400.
But we are patient though.
Finally, something in Texas that actually
Just gonna wait for that next candle to see what happens.
Size seasons with Ultimate Season Pass.
Now, even if that next candle pulls up, I'm okay with that because I want to see where it pulls up to the highest point, and then I want to take the trade there, and then because it looks like it's going to make a down, it's going to definitely make a downturn. Got about 45 seconds here. Yeah, that one is pushing down pretty hard. Almost make me wish I would have jumped in when I first wanted to jump in, but we are patient. All right, so we got a couple of seconds here. Let's see what this candle does. All right, that's the next candle. And what do we have? Push up? Yes, we do. Oh no. That looks like that still wants to go down. No, it's pushing up. So here is a perfect example of why you don't want to keep following that big candle down per se, unless you were a quick trader, because this reversal could have possibly, if I'd have went in higher at 6483 or something like that, I'd have been good. But if I'd have say 6480 and I'd have went in, this could have possibly stopped me out, because on a reversal candle, it can stop you out. But this looks like it's about to go down. So if it goes down, I'm going to go ahead and enter. Yeah, this is interesting. You might be like, well, why are you waiting? I just want to make sure this candle doesn't push up crazy on me, because that'll knock you out of the trade. 64.79. It could even push as high as you can see here, the tip of the exponential moving average. You know, it could even push up as high as there. So it's better to go short here than to go short down here, especially if it's pushing up on a reversal candle. We're going to be coming up on another candle here in a little bit. Ooh, that's pushing down. Okay. All right, this candle is going to be done in about 20 seconds. You're going to see what we got here. Okay, is it going to go up or down? That's going up. Crazy. All right, let's see what it does at 680. It touched 680, but didn't go beyond it, which makes me think it's still probably going to trade down. But we'll see what happens. These candles aren't really strong enough for me to entice me to go long right now. It could go either way though. Now this is a good place to get in. If it does go long, we got more room to the upside because we're at 64.80 now. So this could go as high as 6,500 and you got 20 points going up to the upside. But I don't know right now from just looking at these two candles if it's actually bouncing off this level or if it's going to go up and then turn down to the downside. So when in doubt, take the trade. Look like it is going down. And it's back up. Yeah, this is indecision. It doesn't know what it really wants to do. You can see this colorful. If we go to the main trading screen that I'm looking at, yeah, I look at both of these. Sometimes I'm looking at the one you've seen, and I'm looking at this other one because the execution screen moves a little bit quicker. You can see, that's a large range for that candle. It ended up being green, but it keeps going back and forth between green and red, green and red, green and red. And when you see a wick, this is what we call a wick like this. I usually don't like that type of price action because that means it traded that high. For instance, it traded this high and then it pulled all the way back. And the same thing here. It traded far this way like it was going down, but then it traded all the way back up and then ended up being green. So it's like that's a fight between buying and selling. And when I look at that, those aren't sure candles. A sure candle is like this solid price action all the way down. But this one, this back and forth, that can chop you out very easily. So we're coming up on 9 o'clock. 9 o'clock is usually a time when the trend changes. And so let's see what happens at 9. And go back to the other screen. Oh, that was a push down. Wow. That was a hard push down. This is crazy price action. Now it's going to pull all the way up from that hard push down. And that candle turns green now, which is crazy.
Order filled.
All right, so I'm going to.
Order filled.
Oh, that knocked me out. All right, so I was in that trade. Hold on 1 second. Let me try to go back in again.
Order filled.
Let's see what this does here. All right, so we go back to my screen. It initially jumped in and knocked me out immediately. So now I'm gonna see if it goes up or down. I'm almost at the bottom of where I need to be at, but we're gonna see where it goes. Here's some weird price action though.
Gold Peak Real Brewed Tea isn't made from real gold, nor is Gold Peak Real Brewed Tea made on a golden peak. But it is brewed from real tea leaves and real cane sugar for real smooth taste that's worth its weight in gold. Gold Peak Tea. Real is gold. Click or tap for more.
Texas summers can go on, but with Ultimate Season Pass from TXU Energy, you get 50% off energy charges during peak summer and winter, plus more months of automatic savings.
50% off? That's
It's hesitating around 64.80.
It's longer.
longer than my mom's quick goodbye at a barbecue.
Way longer. It's a top-rated plan with more than $450 in savings a year.
Finally, something in Texas that actually cools off.
Get Texas-sized savings for Texas-sized seasons with Ultimate Season Pass. TXU Energy. Energy forever.
Trading up now.
TXU.com for more information. Rep number 10004.
At Domino's, you can get 2 medium, 2-topping pizzas for only $6.99 each. So while your family may not always agree on which music to play at home, at least if you're craving ham and tangy pineapple on hand tossed and dad wants onions and pepperoni on crunchy thin crust, you can get both. Order 2 medium
All right.
for only $6.99 each from Domino's. Prices higher for some locations.
As soon as it gets up a little bit, I'm gonna move that stop. Lord, this thing is moving crazy. I don't know if there's some news that came out or something, but this is moving crazy. All right. Try not to let it shake me out. It's moving up and down, up and down. Oh, that's looking ugly. Come on back up. See what happens here at this candle. We got a new candle coming up in about 2 minutes. 1 minute, 2 minutes. Starting to push back up. It's definitely a fight between buying and selling. Yes, trading is playing with my emotions. All this back and forth. Sometimes you do have to be patient and allow the trade to work out. But this one is, like I said, this price action is very quick, as you can see, and it's a little weird. So it's kind of like the market wants to move a direction, but then it's immediately reaction back in the opposite direction, like right now. It's definitely moving quickly. Okay, there's a move to the upside. Yeah, I haven't seen price action like this in a while, especially around about this time and the way it's moving. Makes me want to look and see if there's any other news or something that's come out. I think I'm gonna lower my expectations to around here about 200. If it pops up to that. Although it seems like, actually, you know what, here, let me go back to where I was at, 400. then we'll just move the stop to 200 if it gets there. Come on. Come on. Oh, man. Pull back up, baby. Pull back up. All right, come on. There we go. Lock in at 200 right now. All right. I want to go ahead and lock in at 200 because the way it's been moving, I don't know. Now, I may take another trade once it goes above this, but I want to lock that 200 in right now because it's back and forth, back and forth, back and forth, back and forth. And I don't like price action like that. That usually makes me nervous, especially with these long wicks down, just pulling it. I don't like that type of price action. So I'll probably wait and see what it's going to do from here. I am $44, basically break even, $44 down. But I'll just wait to see if there's another trade that I can jump into and then, possibly take it from there. I don't know if it's going to go up or go down, though, because there's been some strong price action seems to be pulling it down. Like you can see this candle was crazy. They pulled it all the way down to like 64. It was like 64, 68. So it pulled it down strong, and then it bought it all the way back up, which is surprising. And then the way it is now is there's these wicks down, meaning there's some strong selling pressure, but then the buyers are winning out, and it's trying to push back up slowly. So even like this, you had this wicks pulling it down while it's trying to buy up. The sellers are pulling it down, and with these wicks, you had strong selling pressure. Then the buyers are pulling it back up. So it's basically fighting to see where it's going to go. But I'm okay with going ahead and taking that $200 trade and just waiting, because like even now, it looked like it was about to make a trend up, and now it's making the trend down. So that's a lesson, like to lock in your profits once it gets to a certain area. Go ahead and lock in your profits, because you don't know what it's going to do, if it's going to reverse to go back to you, go down to you. And I didn't want it to keep going down. When it kept pulling down like that, like I said, that makes me nervous, because I don't know if it's going to take a hard move down and then go against you or what. So as soon as it got back up, I wanted to make sure that I lock those profits in. And it seems to be pulling back hard now. I'm just gonna wait for a couple of minutes here just to see what it does. But one thing I want to point out to you, so you can see the power of the opening range break, and I want to just want to point this out to you while we're waiting. You can see it broke hard down for the opening range break. It broke hard down, and it looked like the trend was going down, right? Well, I always wait for a 5-minute confirmation candle for this very purpose, is that you would have thought it was going to continue to go down. So I could have went short somewhere around here, but then you can see on the next candle, it started to pull back up. And then the trend since this candle actually has been to pull back up. You can see it's steady been pushing back up. Now this candle is pushing down, but if I would have went long, we'd have got stopped out of that. And all this right here was pushing back up. And so, that's why I use a 5-minute confirmation candle, because sometimes the market will reverse on you. Now, it depends where you have your stop at, though, right? It depends on how much risk you're giving it. Now, like I had mentioned before, if I would have went long somewhere up here, short somewhere up here, like 64.85 or something like that, when it first started pushing down hard, I'd have been okay, essentially, because it still hasn't got back above that area. But it'll push down here. I probably could have, took some. Definitely when it pushed down this far, if I'd have went short up there, then, when it got down to 64.68, that'd have been a great trade, pushing down. But my 5-minute confirmation candle, if I'd have went long somewhere here, then I would have been in trouble, because it probably would have knocked me out and stopped me out. So the entries, what I'm trying to get at you is the entries is very important. Entries are very important. And for me, this is just me. I like a confirmation candle because it lets me know that it's going to continue to go in that one particular trend. If it reverses, then you have a chance to take an opposite trade like we did. We took an opposite trade to the upside, made $200, got out of that trade. And you can take a trade in that direction. In either case, though, your entry is important and your stop is important. And then too, just, knowing which way it's going to go. You got multiple times to make money in the market. So, depending on how you set up, when you want to go in, when you want to get out, long as you define that stuff and you say, okay, all right, I'm going to get in here, I'm going to get out there, and I'm going to take profits here. All those things are very important. Yeah, I think I'm going to go ahead and shut it down now. I may wait later to do a trade, but I don't know when it's going to settle out. But I can just see from this price action. Now this candle pushed down, and now this one wants to go back up. And so this is some sideways action around 64.80, 64.70, 75. And I don't know which way it's trading, kind of in the channel. So I don't know which way it's going to go, if it's going to go up or it's going to go down. Look like it's starting to go down a little bit now. It looked like it's starting to go down a little bit now. Just want to see these candles to see what they're doing. Probably 64.75 is a good area to go short if it goes down below that, but I'm going to wait and see. So if you jumped on today, thank you. I appreciate it. Thank you for jumping on. Make sure you like and subscribe this video. Make sure you like it. Please like it. Please subscribe if you're not already subscribed. Recommend this to somebody if they're interested in trading. I'm live every day now, actually Monday through Friday. Even though Friday was the normal day that we go live, I go live every day now. So if you want to pop in and see what trading is looking like every day, we're going to do that. But thank you for jumping on, and I will see you again.